Welcome to the Burrow. It's your host, Lala Bunny, head trader at Bimbo Trading Academy. Today's topic is the bunny method. The bunny method is the way in which I trade. Basically, it is a method of extreme diversification for small accounts involving fractional shares. Let's get into it. Warren Buffett said, diversification may preserve wealth, but concentration builds wealth. And I sort of paraphrase that where I say diversification for capital preservation, concentration for wealth generation. Okay, that rhymes sort of. Okay, let's say that again. Diversification for capital preservation, concentration for wealth generation. So in the beginning, when you may have a very small amount of money, it's important not to blow up your account and get wiped out because then you do not live to trade another day. You can't become a successful trader if your account has $0 in it. You just can't. So capital preservation means preserving your capital, which is money. Your capital is your money. So you do not want your balance to go to zero. And one way to preserve your capital is to diversify. That means take many different investments, invest in many different stocks, many different companies. And what Warren Buffett means by diversification for the capital preservation, but not for wealth creation, is that when you spread your risk around like that, you may not get great results in terms of your gains in money, your monetary gains, but you will preserve the amount of money that you have. If you really want gains in your wealth, you're going to have to concentrate your capital investing in a growth stock, a stock that has potential to shoot up. Now, if you're a day trader, you may not be as interested in growth stocks because they take longer. So you do want a stock that's volatile enough to shoot up within the day, intraday trading. Either way, you're looking to concentrate your money into one stock. That's why day traders sometimes are buying 100 shares, 1,000 shares, 10,000 shares of just one company. They're trying to concentrate their wealth so that if that stock does go up, even by a few pennies, they get a great return because they bought so many shares of it. So when I started out, it did not make sense to me to put, if I only had $100, it did not make sense for me to buy like a $90 stock because then all my money is tied up into whether that stock performs well or not. And it could take a long time. It's very unpredictable. Stocks sometimes dip down for a really long time and pop back up. And I did not have all that time for it because I'm trading for income. I'm a day trader, trading for income. I'm trying to generate my wealth. I'm trying to get high returns. So I could not put all my eggs in one basket, so to speak. And as soon as I discovered that Robinhood allows you to purchase $1 shares, so do some other brokers, that they allow you to buy $1 of a company, I thought that was a fantastic idea. It is a way not only for me to spread my risk, but to learn about how these stocks behave. And I'm in it, so I see. I don't have to always study the charts. I can just look at the price action of stocks that I'm already in. So my method involves, right now I hold over 3,000 stocks. And this is pretty unheard of. I don't know anyone else who trades like this. If there is anyone else out there, please join in the comments because I have not met anyone who has a portfolio that is that extended in terms of owning little small slices of so many companies. My goal, of course, is to own $1 of everything that Robinhood allows me to purchase $1 of. Now, some stocks you can't purchase a fractional share. You have to purchase the whole stock. And I will overlook those stocks if they are above a certain limit. So let's say they're above $100. I will not buy a share of a stock that's over $100. But if it's like a $1 or $2 stock and I can only buy a whole share, I will do that because it does still minimize my risk and keep my exposure low. So, like I said, the bunny method is extreme diversification involving fractional shares in a small account. Now, as your account grows, you can choose to invest more into one or trade, investor trade into like some stocks that you tend to prefer, or you could continue to spread that risk out. So instead of owning $1 of every company, I could own $2 of every company, then $3, then four, then five, up to $10. Like so since there's almost 6,000 stocks, more or less, so owning $1 of every company will come out to around 6,000. But again, it's not going to be precise because some companies don't allow you to buy $1 of them. So I still have to find the terminus, the end result of this, of my method, because I don't have enough capital right now to buy $1 of every stock that's available. So when I do that, I will update you and let you know how many shares. I expect it to be more than 4,000, maybe 5,000 different companies. So after, part of my method also is that after I own $1 of everything I can own, then I will start from the bottom up and purchase stocks that for one share, like stocks that do cost $3, $4, 5, 6, 7, 8, 9, 10, probably up to 20 is where I feel comfortable purchasing stocks. But I don't believe I own anything other than GameStop that trades at above $20. And if I do own a stock that is worth a lot, like Costco, for example, worth tons, I will own $1 or more of that company, but I will definitely own fractional shares of that company. I will not own a whole share of that company because that would represent like a third of my portfolio. And I do not want to put a third of my money into one single company because I need price action, I need volatility. So here's another part of the method where the day trading comes in. So I will swing trade because I'm a pattern day trading. I have the restriction on my account. I have a margin account and I can no longer day trade. I used to take a few day trades each week. And then last November I got flagged and I used my one-time PDT removal. And then in December I got flagged again because I don't like leaving money on the table. I've seen some of my investments in one day or my trades go from like, let's say $2 to $6. And I want to take that money. I don't want to wait till it goes back down to one or three or whatever. I took that money. So I went over my limit of day trades and now I've been shut down. So my account right now is at a place where I cannot place any more day trades. If I do, there'll be a 90-day restriction on my account, during that time, I will not be able to open any new positions, and that would not work for me. So for right now, I have cash accounts with other brokers that I do day trade in. So if I see a great opportunity, I'm going to purchase that stock in one of my other accounts, just a few shares of it, and then see if it works out as a day trade. But in Robinhood, I can't day trade. And it's painful because I've made some really good trades and I've been profitable and I have not been allowed to take those profits until the following day. And as we know, those profits could be lost by the following day. They might go up, but for a stock that goes pretty much parabolic, it usually retraces. So the day trading restriction is the bane of my existence, and my goal is to increase my account to $25,000 so that I no longer have to worry about that. So in the meantime, I am swing trading. So I will purchase my stocks, hold them overnight, and I will trade them the next day. So I could buy one thing. I usually buy it after hours. And then I can sell it pre-market in the next morning. So I might only hold the stock for about 8 hours. Let's see. Well, it would have to be from 12 hours. You could actually theoretically hold a stock for about 12 hours, but as long as it's not in the same calendar day, it's not day trading. So part of my method now is going in after hours, looking at what they did for the day. If they went up and then went back down like a dip, I'll purchase it with the intention that in the next morning, I might see it pop up again, and that's the goal. So it's not day trading yet. I will go back to day trading when I can, but this is swing trading in a small time frame. So how do I make my money? So when a stock that I purchase $1 of, sometimes that stock goes up to $1.10. It's 10% move. Sometimes that stock will go up to $1.20, $1.30. I've even seen $1.40, $1.50, $1.60. So by owning $1 of each stock, I don't just leave it alone. When that stock pops up to the top of my list, when that stock is profitable for that day, I will cash that out. So if a stock, let's say, moved to $1.40, I will sell it. And then I will either repurchase it immediately at $1 again. So what that does is it reduces my risk and my exposure. So I bought the stock at $1, it popped up to $1.40, I sold it off, and I rebuy at $1 at that high level that it's at. I rebuy at $1. That way, if it continues to move, I'm still in that move. And if it dips, I've already limited my exposure and my risk. So that's one method. Another method is that I can sell it if it pops up to 140, I can sell it that day and rebuy it maybe another day down the line because I'm waiting. It depends on how I think the stock's going to move, and I can wait for it to come back to a different level. Now, some stocks just keep going up, and in that case, I kind of missed the boat, missed the train if I do sell it, and I won't be able to rebuy it at that low level again. But what I can do is wait for a retracement, a dip. So if it is shooting up and there's a trend, I can wait until I see the dip in that trend. So I might be purchasing the stock again at $1 higher than what I had it before, but still knowing that it could re remove in that direction of the trend. I don't know how to say that. So when I see a stock, let's use real numbers here. So I owned $1 of a stock. Let's say it moved from 90 to 100. I took my profit. I sold it. Now the stock's trading at like $160. And then I see it drop to 140. And I'm like, okay, I'll get in right here. It might go back up again. So it's all just using your judgment. This is not investment advice. I'm not telling you to copy me exactly. I use my judgment. I look through so many stocks every day. I go through screeners. I use scanners, and I evaluate whether it's a good time for me to get into that stock, to sell it or to keep it. And I only sell like when a stock becomes profitable. And if it's not profitable, I will hold it until it does. So the hope is that it will become profitable. And one of the aspects of my method is that some stocks do go bankrupt and get delisted. So because I own $1 of many, many companies, there is a chance that that dollar will go to zero. And that's just part of my method, and those are accounted for. So I'm profitable even despite of that. So even though there have been some companies that are no longer listed, that has not drastically affected my profits because the profits outweigh the losers at this point in time. So if you do put $1 in everything, you have to be aware that some of these companies could go out of business. Um, that's more risky usually with the penny stocks, the stocks that are trading at like they say under $5 or under $1. So that's probably a topic for another video, but there is risk involved in every single trading method. So even my putting $1 in every stock, that doesn't protect me from having losses. I do have losses, but I also have gains. So it's just about the gains outweighing the losses. That's the bunny method. So I would love it if more people would let me know if they think this method is like insane or if they think it's not going to work in the long run because it's working so far. Um, I'm curious, like statistically, if people can calculate. I'm not that math, like mathematically inclined to figure out whether this method can work in like different markets and what it will look like over time. I just know that it's working now and I'm going to continue doing it. And I use my discretion, like it's not just buying $1 of everything and letting it sit. I'm a discretionary trader. So I also choose when to take that profit and when to purchase that stock again. So I'd say with that element, you can't recreate my trading strategy or system precisely. You're very free to buy fractional shares of any stock, but my actual method involves discernment. And if you look at one of my videos about top 10 qualities that traders have, one of them is discernment. And no one can teach you how to discern whether it's a good idea to buy a certain stock or not. It's something that you have to decide for yourself. With that, I will leave it. And yeah, bunny method. Never heard of anyone doing anything like this before, and it's working. I'm profitable and it's working. So, catch you later. Happy trading.